Obviously, there are many different ways to invest. So, upfront saying that what we talk about isn't always going to be for everyone. What people invest in depends on their own personal circumstances and also changes over time. And that's happened for both Dave and I, and we'll be chatting about that too. But sharing finances is sometimes a scary topic for people. Dave and I generally believe that, more openness when it comes to talking about money is a great cultural change. So I guess the best place to start, Dave, is just the big high question, which is you've got a portfolio, something that, you use to either, grow wealth or generate passive income. And whether it's like cash, housing, super, shares, business, what does that look like for you generally?
I currently have around half of my wealth in shares. There's about 20 to 25% of my wealth in investment property. There's about 12 or so percent in superannuation, about another 12 or so percent in home equity, and then very tiny amounts, basically like very tiny percentages in cash in an offset account. And then also I have a very tiny stake in the company Perla, as you probably know, mate, because I've been involved since the very beginning, and I was later offered the chance to invest in a small portion of it, which I took up that opportunity. So yeah, that's my side of things, mate. What would you say your breakdown is at the moment?
Yeah, so right now at the time of the recording, I'm fairly cash heavy at the moment. Don't unpack it too much, but high level, it's about 50% cash.
Wow,
it's also, yeah, it is a lot. It's probably like 35% ETFs, and then it's about 15% of it's in super.
Is that a property purchase that is coming soon, or what's happening there?
Yeah, the hope is that it's coming, basically imminently. And the reason for it is that, like many Australians assume that they need to buy a house at some point to live in. I'm not saying, that's necessarily right for everyone, but, I'd like to own a home of some sort at some point in my life. And sooner is generally better in a decade-on-decade sense. And it kind of felt, I didn't really have a personal psychological desire to buy now, but with interest rates being so high and me not having a cash problem right now because I've been saving so much, it felt like a smart time to buy because the market wasn't super hot. And I had a lot of friends who bought in that kind of pre-COVID or early COVID era where everyone was just outbidding each other and house prices were crazy. And I thought, I don't have the emotional energy to do that. So I thought I'd buy now. And the other thing that kind of tipped me over was when someone pointed out the stamp duty exemption in my home state of New South Wales. And I thought, I don't really need an expensive place to live, by Sydney standards. So if I don't have to pay stamp duty, then if I screw up my choice of the home, and I sell it in a year or 2 years, assuming it doesn't crash, the worst I've done is paid some real estate and solicitors to do the transaction. And that's a pretty small price to pay for something that might be, good for me.
But you can't, obviously you don't imagine selling it in the future. Is the plan to stay there for a very long time, or do you plan to then kind of sell and move maybe after 5 years or 10 years or something like that? Do you have any kind of forecasts or plans around that?
I'd be pretty happy there. It's looking like it's going to be a 2-bedroom apartment, and that's fine. I think they're probably around 1 mil. I'm generally looking in like some less affluent parts of Sydney, around the kind of southwest area between kind of Marrickville and Bankstown would be how I'd describe it. And for those in Sydney, a 2-bedroom apartment in that part of Sydney is going everywhere from about 450 to 850,000, depending on the quality of it. Closer to 700k would be kind of where I'm aiming for.
Okay, cool.